Hello and welcome to this analysis. Now, today's stock coverage, which I'm doing, is on Kotak Mahindra Bank. I'd covered Kotak Mahindra earlier in February this year. Link to that video is also there in the description box. You can check it out on the coverage it was done there. So now, starting with Kotak Bank, I'm starting again with the quarterly chart, and you can see that the stock has actually been a investor's delight over a longer period of time. As from 2011, the Ichimoku baseline has never been violated, just been tested in during the pandemic lows, and prior to that, nothing close to it. And now again, the quarterly chart Ichimoku baseline is being tested. So a solid kind of a support zone from where institutional buyers and smart money comes in to buy. Right now, the baseline is at 1625, and the quarterly resistance currently is at the conversion line at around 800 1800. Let's have a look at the monthly chart. In the monthly chart also, you can see how beautifully from 2011 the stock has never gone below the Ichimoku cloud, always stayed above it, tested it during the pandemic, and now for the first time in a matter of 13 years, the stock is trading inside the monthly Ichimoku cloud. Monthly Ichimoku, in once in as per Ichimoku system, a stock which is in its cloud in that particular time frame represents uncertainty, and this is monthly. Monthly meaning a lot of uncertainty, which we will gradually see in the lower time frame. Now, in the monthly also, right now the support is coming in at 1625, which matches with the quarterly support. Resistance 1775 and then 1800 again, which matches with the monthly support. Let's have a look at the weekly and understand what this uncertainty has done to the stock. As you can see that right from the month of, actually, you can pull it back to 2021, except for two candles of October 21 and November 21, where actually Bank Nifty was in top form, that the stock managed to push its way above this line of 2000. And right now, and again now this year in April and month of May, it spent a time below this lower line, which is at around 1690. You can call it 1600 because 1650. So in a range of from 2000 to 1650 for the last 3 years. So not giving any money to the investors on the long side, and at the same time not even giving money to traders, short term swing traders, both long and short side, because of the narrow range it has been focusing on non-stop. Now in the weekly, the support comes in at 1710 and then 1660. Below that we have this gap area, which I'll come in the daily too. Resistance is at 1760, then at 1850, and of course then this big one at 2000. So big sideways zone. In fact, at one stage I was, in the earlier video, if you'll go and check, this was earlier looking like a big head and shoulder pattern to me earlier on, but it's gone and almost cancelled it. You can see, because hardly any, pulled back. So that huge bearish thing was pulled out. But one should keep in mind that if the stock fails to hold this level of 1625, 1650, weekly basis, then it could be in some danger, because that's a steep decline. A long trend area would be breaking down, but that's a long way to go. First, let us look at the daily time frame now. In the daily time frame, you can see the stock is approaching a bullish harmonic bat formation, which is just near 1640 right now. And it's not necessary the price would go to there, but in case the stock continues to decline, then yes, it has a possibility of coming down all the way to this level of 1640. Prior to that, there's good support at 1680, with a resistance big one at 1760. And you can see out here that spent a lot of time from August 24 till uh, October 24, trying to protect this level of 1760. So that's a big resistance in the daily time frame, 1760. Any rallies to there could see some selling pressure above 1760. We could see it push its way towards 1800, 1825, which is next big resistance rod. But one should keep in mind the stock is overall on the weak side. Now, before I go down to the hourly and 15-minute time frame, the derivative data, the futures derivative data for the month of November, which just right now we have just 6 more trading sessions left in the month of November. So I'm not looking at the option data there, just looking at the futures. The future data in the last 5 days has seen a huge short buildup. So a lot of short buildup in that any rally would see short covering, which would probably happen likely, if it continues to sustain above 1760. Now, before I go down to the lower time frame, let's have a look at the ratio charts of Kotak Mahindra Bank with the bank nifty, and you can clearly see right from the pandemic time, even though we can see the stock has done a fantastic rally from the pandemic low, almost doubled our money. But in terms of ratio, the stock has been a rank underperformer for its sectorial index, the Bank Nifty, pushing its way down out here, even in the monthly chart. In the weekly chart, interestingly, it tried to go above the trend line, failed to do that. Now, if it continues to drip down below the October end month lows, then further weakness for underperformance of Bank Nifty would of Kotak Bank would happen against the Nifty. It needs a lot of upside push to come back into reckoning as a good above or an inline performer with Bank Nifty right now. Let's have a look at it with the Nifty, since it is a part of the Nifty, and you can see here also from the pandemic lows how badly it has underperformed the Nifty. If you would have put your money in Nifty instead of Kotak Bank, you would have made more money. Then in that case, Nifty would have given you a better return in the last 4 years. And it's not just, just a little bit of bounce back September 20th to December 22 months. And ever since that, drip down, continuous drip down taking place. So again, the stock, if you look at the weekly of this ratio chart with the Nifty, it's trying to break above the trend line. Tried it, but could not do anything. Needs to start pushing up above its July ratio against the Nifty to do something meaningful. Otherwise, below the September lows, it would again come under tremendous pressure, with the Nifty also has continued to be a rank underperformer. Let's go back to the Kotak charts and now look at the hourly. In the hourly, we saw some bounce back in the last 2 3 days in Kotak Bank, so trying to push its way up. And as per Ichimoku, the baseline support is at 1710. If that does not hold, then it's in trouble. It could be in serious trouble. Below 1700, definitely. So 1700, 1710 is trouble zone for the stock in immediate short term. There is immediate resistance at 1740 and then a big one coming at 1780. So from trading point of view, in case the Kotak tries to revive for intraday or swing trading, BTSTS types. So 1740 to 1765 is a zone where one should be careful. Above 1765, some momentum possible. Let's look at the 15-minute at the Ichimoku support and yesterday's last 30-minute sharp sell-off. At that support, failure to hold pushes it down to 1710 and then a major support 1700. Again, trouble for it. Resistance is now at 1740. So overall, my reading for the stock currently is that unless it starts sustaining above 1760, the upside momentum looks weak to me in the stock. It could, yes, it could turn up, could move if the market momentum is good. Above 1760 only we would see short covering, fresh long attempts taken in, which could take it to 1825 to 1900 odd, which is the big barrier now out there. in the stock, as we discussed it in this, the 2000 level out here, because so much of sideways movement has happened in that stock. It's not going to be that easy, but if it does, great. But for that, it needs to push its way above 1760 at the, before any good interest will come in the stock. While on the downside, an area where I would be looking at, to accumulate it or go for a bullish trade would be near the bat at 1640. Now 1640 to 1625 is that zone I would be eyeing it. Failure to hold that, last hope for longs would be this gap area, a gap up which was made in May 26th, 2024, to hold on to it, cover the gap and hold, then only some revival. Failure to hold that is bad for the stock. It would then start reeling under pressure further downwards, maybe towards 1500 or lower also. Remember, you can see it very clearly how much time it has spent. So it is overdue for a trending move in my reading. 4 years, almost 3.5 years of sideways. So overdue for a trending move direction. We have to spot it and be with that side of the direction. Now, a disclaimer: this is not a trading or investing advice to you. This is a video purely based on the studies of Ichimoku and Harmonic trading patterns. Whatever trading, investing decisions you take, please do your study carefully and then take one. And I also hope you this video is of help to you. So please do like it, share it, and do follow me for regular stock ideas. Until then, happy trading and investing.